Amalgamation study, Google, using a daily time frame. So what do we note here? Well, we push up to A. From A, for whatever reason, we find supply and we react. Naturally, we would draw resistance. Now we come to test resistance at B. What do we note? Well, first of all, we gap up. Yet, we cannot close above resistance. The next bar is down. Then the following bar is down with a slight increase in volume. So this action here, we do upthrust A. However, it is very difficult to trade the first bar and second bar. Okay, we're not quite sure because of the demand imbalance. We know that demand hasn't really come into the market because we should, after a gap imbalance, after a gap in this case to the upside, this suggests a demand imbalance. So we should be closing firm above resistance. Yet we're not able to hold. We can't even hold above resistance. Then the next bar is down. So as this bar closes and fills this gap, and we close under this price action, this we would classify as an upthrust. And this final bar here with this slight pop in volume is our confirmation that this behavior is suspect. So there is no trade per se until this bar closes. From this move here, we cap down and we continue south, breaking support where we spring, where we see demand and demand, and we test here, and then we rally back up. Now here we have a beautiful, superb, clean upthrusting action. Why? Well, it's the highest volume on the chart, and we cannot close not above not one but two levels of resistance, which is made by these anchor points. So we've got A made with this volume, B made with this volume, then the upthrust with this volume here, we cannot close above. In fact, we pops our head above this action to reverse and close weak. Now this is an upthrust and a clear rejection of higher prices. Yes, we note the gap, and if we draw in the towel, that is still technically an upthrust, and a very strong, powerful upthrust. It's an instant sell right on the close. Or again, if we're close to the market and we use a 60-minute time frame or a 15-minute time frame, as we rally and penetrate down through these levels of structure, we can get in here for a cleaner, tighter entry point. The question is, this is very easy to trade. Okay, well, now stop would have to be above the upthrust. So is this action over here an upthrust? The answer is, it doesn't really matter. Why? Well, because this is the action that counts. We are rejecting higher prices after this action, and we try to break here with lower volume than the anchor point after this gap, which we would interpret as a demand imbalance. Yet we fill this gap comfortably on this bar. So something's off, and we must interpret that gap actually as additional weakness. So this move at B is suspicious. We gap up with no follow through. It's designed to wrong foot, and traders will be caught out here, no question. People get excited from a gap, and when you gap and we rally through here, think about this here, there'll be a lot of traders caught off guard, and they have to sit through all of this action, and they may liquidate along the way. There is also additional chart reading that we can apply to this upthrust, not that we need it. This is very, very obvious. It is the bar before the upthrust, this bar here. What do we note? Well, that's the volume for this bar. and that's the volume for the previous bar and the previous bar. So we have a narrow spread with, at that point, the highest volume on the chart, and we are unable to drive higher. So we know that that is a case of effort versus result, and it is a bearish case. With all that volume, we should be making higher prices, yet we only net this much to the upside. So when this bar prints here, we gap up and we push up through to reverse and close weak. After this, we have two cases of negativity, along with this wrong footing action here and more gaps to the downside. This upthrust here is a very good play when we take into consideration other price bars. However, we don't need this bar of effort versus result with this volume. We still can trade this upthrust. It is a perfect textbook example. There is a lot more to this chart. In fact, another 3 setups, which we can see here at C, D and E, along with other weak traits. Now let's add structure and all becomes clear. Now what do we note? Well, C is a beautiful 2-bar top reversal. The first bar here pops above all this price action, which of course is resistance. Then the second bar pops its head above the previous bar to reverse and close weak, engulfing the first bar and closing back under this local resistance level. Whilst we are here, which is an overbought position in this trend channel. So we have a 2-bar, a perfect 2-bar top reversal in a supply confluence. We have this here being our supply line, which makes us overbought, and this being resistance. We have one close outside and we're instantly trading back within. For all intents and purposes, this resistance has held. This is a beautiful, wonderful trade. What is this action doing here? We are testing, as shown by the blue arrow here. We're just testing to make sure there's no buying emerged. Don't forget, this bar had to push up and then reverse. So before markdown, they want to make sure there is no further buying left in the market. As we know, the market likes to test high volume bars. This is the high volume bar. It's no surprise we come to test. This isn't coincidence. This will happen time and time again. And how do we test? Look at the volume. We are not going to break this. I mean, we can draw this level of resistance over, but we don't need to. We can see this reversal action in an overbought position. We have this resistance above and this resistance here. This is a superb setup. So when we tie all these pieces together, we have a very, very high odds of success. So from here, boom, gap down and look at one. Look how we fall. If we draw in the tail from here, clarity reasons, we slam down through this support level and through our demand level, closing weak with a huge surge in volume. Now that is supply, and we know the background conditions of our chart are indeed weak. See, this is not a shakeout. Why? Because shakeouts occur in bullish environments. All our background is bearish. When we do break this level decisively, and we do close under the demand line from our channel with a huge surge in volume. However, we don't close well under. You know, we like to see 50% of our spread. We draw our spread from here. We like to see 50% of our spread close under these areas, but we don't. Which is probably why we come back and we test here at D. Now D is interesting. What setup is this? This is our rally back to ice. This is support. support, valid break. We can see this from the volume and the spread. So when we come back, we're looking here for a test as we start to rally for a rally back to ice setup. As we break this resistance here, sorry I didn't label it, this is D, and we try to break on very low volume at resistance. And where are we? In an area of supply, which is bar 1. Now ask yourself, logically, does this move here look as if it has enough force, buying force, to break through this resistance and this supply bar to the left? No, of course not. However, this is upthrusting action and is difficult to trade. No doubt, no question about that. However, it does give us information, it gives us data, and it continues our story of weakness. So we upthrust and we come down. Then boom, what do we have? 2 bars later at E, we have a narrow spread up bar with lowest volume than the previous 2 bars at resistance. This is no demand at resistance in an area of supply after an upthrust, and all of this weakness in the background. Now E is very interesting. Why? Because it's the lowest volume up bar we've actually had. I'm not sure about this one, but we can just say for 1, 2, 3, 4, 5 for a minimum of 6 months. Just think logically about this behavior. We have the narrowest spread up bar with the lowest volume for the past 6 months at resistance after an upthrust, which is in an area of supply after a 2 bar top reversal, which is testing for a huge supply imbalance being the upthrust and this suspicious behavior at B. This market is weak. And this bar E is telling us the force of demand is weak. And this little trade is like the feather's weight. Like I explained a couple of sessions back. It's not the turning point per se for the whole trend. However, it is the turning point for this next leg down. And this would be my favorite trade on the chart. Why? Well, because of our exposure. Our risk is minimal. We know there's no demand in this market on bar E. That's clear as day. And we have all this weakness in the background, all of this weakness. And our stop really is, look, we even gap down from bar E, but our stop can be the highs here or the highs here. So as we come down here, we move our stop to break even. So due to the risk and the clean read, my favorite trade on the chart, and we're leaning against structure. Added bonus. So if we take the trade from here, which again is beautiful, our stop would have to be above the upthrust. And if we trade this upthrust from the close, our stop is this big. And our stop is, if we close here, our stop is this big. So as we can see, the stop management on these 2 trades are much higher than the trade at E. Okay? Don't get me wrong, although I like the trade at E, and I like the way it's very delicate in comparison to this setup here and this setup here and this setup. I mean, this again is a wonderful trade, 9 out of 10, and this is a 9 out of 10 trade, but this personally is a 10 out of 10 trade. Why? Well, that extra 1 just goes to minimal risk. And as traders, we always want to reduce exposure. We always want to reduce risk. Then as we come down, what do we note? We break this support level, increase in volume, close over 50% under, and we continue south. This is a lovely little trade. So this chart is an excellent study illustrating the majority of weakness that we use in our methodology. We have 3 upthrusts, testing high volume, we have breakout bars, we have 2 bar reversal setup, and no demand setup. And if we combine these with the use of structure, as we have done here, hopefully you can see how powerful that these techniques are, especially when we combine many of these elements together. Like the 2-bar reversal here, where we're in a supply confluence, which again, the nature of this is testing here. So the 2-bar top reversal is testing for demand whilst being overbought at the supply confluence. It truly is fascinating how we can piece this together to provide very strong, powerful setups. It's fantastic that the market can provide this action and we're able to read this. Due to this being a daily chart, we must be patient and wait for the market to come to us or to tip its hand like it did at E. And we are rewarded with 1, 2, 3, 4, 5 trades, 4 excellent trades. This is a no-brainer. That's a no-brainer. That's very no-brainer. That's a very good trade. Very difficult to trade this one. So we get 4 or 5 excellent trades in a 6-month period. This concludes our session on amalgamation studies and indeed concludes our course on signs of weakness. There's a question here. Beginning to understand the purpose of telling the story. How many stocks can you trade in this manner as it requires a great deal of effort? Okay. I think this person is asking how he understands the power of telling the story now, which is good. I'm glad I'm driving that home. How many stocks or instruments can you trade? Okay, as it requires a lot of effort. Okay, well, when we construct a trade, or when I construct a trade, I don't focus on the trigger per se, as in here with this no demand bar. My attention is that of the background, the context. So this is merely the confirmation to go short because of the background conditions. Most traders, look, you may have heard of that 90% of traders fail, and that's because they probably use candlesticks. They see a bullish engulfing pattern, or a hanging man, a shooting star, and will trade whatever the pattern is, whilst they don't understand the background conditions. Okay, they don't understand the context. But when we see this here and we understand all this, it literally is no brainer. It's glaringly obvious. There is no more buying force in the market. But to get to this level of understanding or skill requires time and practice. But it's possible. Very much so. It's just a matter of time and practice. I mean, Wyckoff followed closely around 10 to 12 stocks, and I mean kept a close eye on. I mean, I know some traders who trade similar to me and will only trade 2 instruments or stocks. It does require effort, granted, but when you get to a certain level, a certain skill level, and when we look at the chart, it becomes more or less muscle memory. I won't use the word simple, but it does become obvious. Okay, I spent thousands of hours working on my craft, and I mean, other traders become frustrated in a completely different sense to us. Their system or strategy no longer works for whatever reason. However, we can read literally 90% or 80% of the bars on any given day or any given chart. We read each bar more or less as it unfolds, and we pay very close attention, strict attention, when we have price near structure. We're looking for the demand supply imbalance, taking into consideration the background of either strength or weakness. To answer the question, in the beginning, it's wise to trade 2 or 3 stocks and become familiar with the character, and most importantly, you. What concepts or principles do you like to use? What aspects do you fully understand and resonate with at a deep level? When you focus on 2 or 3 stocks and apply all the knowledge you have learned throughout this course, you will learn to make your own setups. Certain principles will jump out of you, and you will know 100% what works for you. And then you can start to dial in. You can start to hone in on your setups and get them to an expert level. How do you get to an expert level? Well, you analyze the conditions beforehand. What are the optimum conditions for that trade in question? What should occur after the next 5, 6 or bars of your entry? Where are we structurally? We can literally eyeball the chart and notice any limitations of the trade. Then after time, and you become very astute with your setups and know the conditions in which they arise, you can create watch lists and you can focus on more charts. I would not recommend starting with 20, 30 stocks in the beginning, as your analysis skills takes time to develop and the level of understanding for each given setup will be vague. Like the jack of all trades, master of none scenario. It takes time and takes practice, and it's advisable to understand the whole methodology before you hone in to individual setups. Why? Well, it's because we need to understand the background conditions for contextual purposes. Then all of a sudden, something will click, almost metaphysical, a light bulb will switch on, and a certain combinations of a set of concepts, a setup that really hits home. It will resonate with you at a very deep level, and you will know. And then boom, you can dial in, you can focus, you can finely tune it, and then take it to the next level. Like personally, I love no demand, no supply bars, and have developed a very, very detailed trading system around this. Don't worry, session 10 we'll cover how to construct setups along with an in-depth example. I think it's session 10 is tying it all together. But constructing the story is of vital importance. Okay? Let me wrap this up. In the beginning, it's advisable to use the whole methodology over 2 or 3 instruments so we become familiar, understand it at a very deep level, and tell the story of strength or weakness. Then as you become proficient and as you start to really understand certain combinations or concepts or principles that work best for you, okay, and only you, don't copy someone else's, because I like no demand, no supply setups, you don't have to like them also. Most people prefer springs or upthrusts, or some people I know some traders who love trading shakeouts. I do not even trade a shakeout. It's down to the individual. There is no right or wrong. Do what works best for you. And then over time, once you can construct a setup, then you may want to play with swing trading and then apply it to, then you can watch 20, 30, 40 stocks, and then you can create watch lists, etc., and then make the markets work for you. Very good question. Suggested assignments. Find 5 examples of upthrusts, 2 examples of 2-bar top reversals, and testing. 2 no demand tests, 2 testing with demand to the left, 2 testing high volume bars. Now, if I were to only pick 2, it would be upthrusts, which is the opposite of a spring, and 2 no demand tests, which is the opposite of the no supply. Why are these 2? Because I trade these 2, I would say, every day, if not every other day. Okay, these are bread and butter trades and should be understood thoroughly. They are all very important, don't get me wrong. However, if I were to pick 2, it would be upthrusts and 2 no demand tests. Good. This has been an excellent session and completes our study of signs of weakness. Please feel free to send in any questions that may arise, and hopefully I should get back to you within the next couple of days. Thank you very much. Take care.